The Q3FY18 earnings call of Lumax Auto Technologies Limited. Along with me on this call, I have Mr. Deepak Jain, Director, Mr. Sanjay Mehta, Director and Group CFO, Mr. Ashish Dubey, CFO, Ms. Priyanka Sharma, Head Corporate Communication, and SGA, our Investor Relations Advisor. The results and the presentation are uploaded on the stock exchange and the company website. I hope everybody has had a chance to look at it. Before we start with the discussions on the financial performance of the company, I would like to share a few highlights of the automobile industry. The year 2018 for the auto industry has started on a positive note, with all the segments continuing on the growth trajectory. The commercial vehicle segment and the two-wheeler segment have been riding the wave of infrastructure development, and the recovery in the rural markets is also backed by two successive good monsoons. The union budget has provided the fillip for the rural sector, which in turn should fast forward the growth momentum in the automotive sector, predominantly in motorcycles, three-wheelers, and light commercial vehicles. The uptrend in auto sales across the segments augurs well for a diversified auto component company like ours, who can capture the opportunity the industry presents with its wide range of product offerings. We have stamped our position in the industry as one of the most prominent leaders and a preferred supplier for all major OEMs. We have a diverse basket of product offerings for the OEMs. Lighting is the only common product between Lumax Auto Technologies Limited and Lumax Industries Limited, with a clear understanding and differentiation that Lumax Auto Technologies would supply lighting modules only to Bajaj Auto and the aftermarket, and the rest of the OEM lighting business shall remain with Lumax Industries Limited and continue as it is. We have had a good quarter on the back of improved volumes from one of our largest customers, and the aftermarket business has also witnessed sequential quarterly growth this year. The rebranding exercise has helped us position our brand and products differently and have helped us to improve the performance. In the coming quarters, we also have aggressive product development plans where we shall be witnessing over 40 new product launches in the aftermarket. Let me take you through the performance of each business entity. The standalone entity caters to the aftermarket, majority of which is lighting module. We also manufacture chassis for two-wheelers, plastic modules, and PCB assembly. The major customer continues to be Bajaj Auto and Honda Motorcycle and Scooter India. The company has recently added the following new models for existing products as well as new products during the quarter. For Bajaj Auto, the new Avenger LED headlamp and the new Discover headlamp with daytime running lamp. For Maruti Suzuki Swift, the PCB for LED tail lamp and LED high mount stop lamp. And for Hero MotoCorp, for Passion Pro model, the PCB for the LED tail lamp. The Chakan plant of the company also received the TPM Excellence Award from its esteemed customer Bajaj Auto in the month of January 2018. Lumax DK Auto Industries, a 100% subsidiary of the company, manufactures lights and plastic modules. Bajaj is one of the major customers for the subsidiary. The company is in continuous process of adding new customers as well. Lumax Cornaglia Auto Technologies is a 50-50 JV between Lumax Auto Technologies and Cornaglia, Italy. The JV manufactures air intake systems, and the major customers are Volkswagen, Tata, Fiat, and Skoda. The JV commands a 100% share of business with Volkswagen and Tata Motors. In the last quarter, as informed, we had already received LOI for supply of air intake systems from MG Motor India, and also an LOI from Tata Motors for the development of urea tanks for the light and heavy commercial vehicles. Lumax Gill Ostom Technologies is a 50-50 joint venture between Lumax Auto Technologies and Gill Ostom LLC. The JV manufactures seat frames and seat mechanisms and is a Tier 2 supplier through Lear and Adient. The company is in the continuous process of adding new customers for its seat frame business. Lumax Auto Technologies is a 55% subsidiary formed in collaboration with Mano Industrial Corporation, Japan. The entity manufactures gear shifters and parking brakes. The company has a market leadership position within the segment with approximately 70% market share in India. The company has commenced supply from its new plant in Gujarat to SMG or Suzuki Motors, Gujarat. We are witnessing a migration from manual gear shifters towards automatic shifters, which would help the subsidiary to achieve a strong growth in revenues in the coming years. The company has ceded the management control of its step-down subsidiary company, Lumax Engineering Private Limited, in favor of the joint venture partner, CIPAL Italy, on January 16th, 2018. Thus, this company will now become an associate company in accordance with Ind AS 28 instead of a subsidiary in subsequent accounting period. The rapidly changing trends in the automotive industry are presenting the auto ancillary companies with a new challenge each day, but our JVs are well positioned to cater to the changing demands of the industry, and we are also confident of growth in the coming years. Now I would like to hand over the line to Mr. Sanjay Mehta, Group CFO, to update you on the financial performance of the company.
Good afternoon, everyone. Let me take you through the financial performance for the company. Due to applicability of Ind AS with effect from this financial year, the results for Q3 have been prepared in compliance with accounting standard, and accordingly corresponding figures have been restated to make them comparable. Q3FY consolidated financial performance. The consolidated revenue stood at rupees 277 crore against rupees 220 crore Q3 last year, up by 26% on year-on-year basis, led by improved aftermarket sales and increased volumes of major customers of the company, that is Bajaj Auto Limited, Honda Motorcycles and Scooters India Limited, and Maruti Suzuki India Limited. The company reported EBITDA of rupees 30 crores as against rupees 18 crores Q3FY17. EBITDA margin has increased by 260 basis points to 10.7% against 8.1% in last year, largely on account of better operating efficiencies and improved performance of the subsidiaries and JVs. The profit after tax and minority interest stood at rupees 13 crores in Q3 this year as against 4.2 crores last year. The PAT margin has improved by 280 basis points to 4.7% against 1.9% in last year. There is a high taxation as the Pantnagar plant is no longer exempted for tax benefits from this financial year. The company-wise revenue breakup are as I'm just explaining. So far Lumax Auto standalone is concerned, the revenue has stood at 154 crores as against rupees 100 crores in Q3 last year, a growth of 54% with EBITDA margin at 9.7%. Lumax DK Auto revenue for Q3 stood at rupees 78 crores against 85 crores last year, a decline of 8% with a near double-digit EBITDA margin. Lumax Cornaglia revenue stood at rupees 13 crores against 9 crores last year, a growth of 37% with EBITDA margin in mid-double digit. Lumax Mano revenue stood at 31 crores against last year of 26 crores, a growth of 21% with EBITDA margin in mid-double digit. Now we open the call for questions.
Thank you, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Participants are also requested to restrict their questions to Lumax Auto Technologies Limited only. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. first question is from Deepak Jain from Shubhkam Ventures. Please go ahead.
Hello, sir. Can you give us the replacement market growth for this quarter?
For quarter 3?
Yes, sir.
Yes, the replacement market growth for quarter 3 was at 17% compared to Q2. The first quarter, the quarter 2 of the current fiscal to quarter 3, if you compare on a year-on-year basis, it stands at 24%.
Okay. Sir, another question is on your supplies to Suzuki, Gujarat. So, which product you are supplying, sir?
Well, we are supplying the gear shift lever for the Swift, which has been recently productionized and started at the Gujarat facility of Suzuki.
Sir, like the automatic gears, which I think you were supplying to Baleno, so that business, so that is not there in the Swift. I mean, you are not present in the Swift in that segment.
So currently, we have started to supply the manual transmission of the Swift, and going forward, we are in touch with Maruti Suzuki for developing both the automatic gear shifters for their forthcoming models and variants, and also in dialogue with them to possibly start development of the AMT shifters for some of their new models.
Okay. So, Maruti would still be importing these products for Swift?
That's correct. They would still be coming as KD, and with time they would probably have localizations plans, which the company is already discussing with the customer.
Okay. So secondly, I want to know the Bajaj mix on a consolidated revenues, and also how much impact will come once Bajaj shifts. I believe there is some accounting shift how they book their revenues. So what would be the impact?
So Bajaj
on the top line?
As a total customer for us on a 9-month consolidated basis stands at approximately 251 crores, which is 32% of the total pie. Currently, the accounting change has not happened, but going forward, whatever is going to be the reduction on account of that part will be recovered from the other growth in terms of other customers as well. So we don't anticipate that to take a setback on our revenues going forward in the next year.
Okay. So I mean, this growth of 15-20% in spite of this accounting adjustment on a top line is still feasible?
Yes. We do look forward to a similar growth of double digit going forward in quarter 4 as well as perhaps in the coming financial year as well.
Okay. So great, and all the best for the future.
Thank you very much.
Thank you. Next question is from Ronak Sarda from Axis Capital. Please go ahead.
Yeah, hi sir. So a couple of questions. First was on your JVs. If you can just highlight what's the content difference between your Manho JV, for the manual gears going to AGS and then CVT. How much would be the content difference?
So in terms of current mix, almost close to 85% to 90% of the revenues would come out of manual transmission shifters, and about 10 to 15% would come out of the automatic transmission shifters. Is that your question?
No, I meant, let's say manual would cost X. What would be AGS?
Okay,
and what
so
would be CVT?
so the cost difference between manual and automatic is anywhere between 4x to 5x, depends on the kind of electronics and the kind of transmissions and the gear changes, but anywhere between 4x to 5x would be the difference. And going forward, we do see that the market is now slowly but surely moving towards automatic shift levers more than the manual ones.
Right. So when you're saying New Swift has imported AGS, the AMT, that would be, I mean, it would be still more expensive than what you were saying. Like it would be like 7x, 8x of the manual gear?
That's correct.
Or
it would be.
Okay. Okay. And the second was on your Cornelia JV. I mean, if I look at the customer mix, we do not have Maruti in that. So how difficult, and when we do supply to Maruti to different segments, so how difficult is it to get a share of business with Maruti? And I mean, what's the outlook here? I mean, what's the target do you have in mind when you look at this business segment?
So when we are engaged with Maruti Suzuki, from Lumax Cornelia's JV point of view, we are engaged with them, and there are some discussions going on to perhaps have some business outlook in the coming years. It may not necessarily be for our existing product lines. It could be for even certain new product lines. But yes, it is difficult, and these things take a little longer time in terms of gestation. So we anticipate that it's not impossible, but we will try our best to get Maruti Suzuki as one of our customers for this JV.
Okay. And I mean, how does BS6 help? I mean, this JV. I mean, the new products would there be a very high level of premiumization in the product supplied as well?
So this is Deepak Jain here. Let me just take that on BS6 as well as I just put that Maruti call again. So fundamentally, as you know, the Lumax Group has a very, very strong relationship with Maruti Suzuki. We already have, as a group perspective, two basically product lines which are actually market leaders and, of course, having a huge market share. Lumax Cornelia, per se, is actually having a much better opportunity when the BS6 emissions come in, because I think it is more on the trending part of it in terms of light weighting. There are also certain other product lines which basically goes into the CV segment, and as the Suzuki also may actually in future get onto LCV segment, there are urea tanks which Anmol spoke about in his opening address. So hence there is definitely an opportunity on BS6, but I think we are a little bit more concerned on, or not more concerned, but we are more actually excited upon is the BS6 opportunity which is in the light weighting. And this is where the CAC ducts and the plastic filters would actually come in. So we definitely see a more rapid expansion of this JV in the coming years because of the trending of BS6. Not necessarily just in 2021, but it can also be a little bit before, because order realization may be a bit before 20 March.
Sure. And so my last question is on the two-wheeler LED penetration. I mean, we suddenly saw a sharp increase in LED content in this Auto Expo and various two-wheeler products as well. So, I mean, any OEM feedback you have, who are the most aggressive, and how does that benefit, for you being a customer at Bajaj Auto, but if you can just talk about the industry as well.
Okay, so I think I can just talk about an industry and then we can go into specific to Bajaj Auto. Obviously, the LED is shifting very strongly. Primarily, it is not mandated, but it is due to, obviously, the BS6 also coming in. So it's expediting the LED adoption, because in one more trend, as I said, lightweighting, another trend is actually energy efficiency. So BS6 requires more safety and comfort sensors probably to go into the vehicle, be it four-wheeler, but not only four-wheelers, but also two-wheelers. And hence this LED adoption coming, because right now they would like to, they know that there is a technology available in lighting which will consume this thing. So this adoption is very, very rapid. Lumax Group has a high penetration and also is adopted. However, most of the business captured in the other companies. Lumax Auto Tech is basically Bajaj Auto, and of course Bajaj Auto is also adopting LED headlamps as well as tail lamps. So that's actually a trend which is going to continue in the industry, and we're pretty well positioned to actually get this opportunity.
So I'll just add to that. If you see in the last quarter, we have launched two models of Bajaj Auto, as I mentioned in my opening, both on the Avenger and the Discover, which have a LED content in it. So again, as the models are coming, the new models coming with LED technologies, and since Lumax Auto Technologies is a big customer supplier to Bajaj Auto for their lighting requirements, so the LED technology would automatically come into the company.
Sure. So if I can squeeze in one more question. So let's say when we're supplying to the Avenger, the LED headlamps, so what was the headlamp content in, let's say, the old generation and versus the current one? And secondly, who are the main competitors when you look at the two-wheeler LED product portfolio? I mean,
so in terms of the LED content, again, there is not anything which is imported. So the local content would primarily be a very high percentage. In terms of the pricing, it moves almost close to 2x to 2.5x times than compared to of a halogen bulb into a LED two-wheeler lamp. In terms of competitive landscape, I think pretty much all the two-wheeler lighting players, you have Vrinder, you have Varroc, you have Fame, would be the three big competitors in the two-wheeler lighting space for Lumax as a group.
Okay. Okay. And I mean, do you expect this price erosion to happen? I mean, still, I mean, it's a huge, jump in terms of content supplied. I mean, any expectation on where could the new, content, the pricing might settle?
No, we expect this to continue. We don't expect this to really go down. We expect, because there is a very difference of engineering and technology involved in an LED lamp. So the price differential between a halogen and LED would definitely continue.
Well, that's good news for the industry. Thank you.
Thank you.
Thank you. Next question is from the line of Rajesh Kothari from Alpha Accurate Advisors. Please go ahead.
Good afternoon, sir. My question is, you mentioned that without considering, even after considering the Bajaj Auto change in methodology, you will report about 20% kind of a growth. So I'm just trying to understand what will be the major driver for that growth, because considering Bajaj is almost 30% of your revenue.
So this is Anmol Jain here. I did not say 20%, but I did say that we will continue to maintain a double-digit growth going forward as well. If you see our Q3 performance on a consolidated basis, we reported 26% growth, and quarter 4 should be a similar growth story, but next year is too premature for me to comment, but we definitely would maintain a double-digit growth despite the accounting change. Answering to your question, apart from Bajaj Auto, we have a very bullish growth projected for the aftermarket. You have seen the similar growth in the quarter 3 and the 9 months specifically in quarter 3 in the aftermarket, we've had a robust growth. And also Honda Motorcycle Scooter India, and also the SMT or the PCB business. This has, again, as the market is more moving towards LED, we directly gain from this shift. And recently we have also entered into the swing arm business for Bajaj Auto, apart from the chassis. So that business is just nascent. This is the first few months we have been in production. So we will get the annualized volumes and the annualized benefit next year. So cumulatively, all of these different segments would grow, and that's why I said that despite the accounting change, we will still maintain a double-digit growth going forward.
So this swing arm business, which recently you got from Bajaj Auto, how big this can be, and who are the current suppliers to Bajaj to whom you replaced?
Well, there was a supplier which went bankrupt, and we've taken over that business in terms of Bajaj Auto has shifted it. We are currently catering to the Aurangabad facility with certain models that Bajaj Auto makes in Aurangabad, and recently started also servicing the Pulsar and the Avenger platforms, which are the big volume drivers. We anticipate that going forward, we should be close to approximately 30 to 40 crores of revenue being added by this product line, perhaps in the next fiscal.
I see. And of course, one of the bigger growth driver will be also the Lumax industry itself, because there is a significant change which is happening because of this LED.
That's correct.
Understood. And as your revenue growth becomes much stronger despite that Bajaj Auto impact, do you think the operating profit margins can improve further from here on?
Well, you've seen a shift in the operating margins. We are now at double-digit EBITDA levels. And if you see compared to last year, quarter 3, there is almost an increase of more than 2.5% in terms of margin expansion. So definitely we would like to continue the same outlook in terms of margins for the coming times.
Okay, fine. Thank you, sir. Thank you very much.
Thank you.
Thank you. Before we take the next question, we would like to remind our participants that you may enter star and 1 to ask a question. Next question is from Manish Bhandari from Vallum Capital. Please go ahead.
Hi, good afternoon, Anmol. My question is regarding the aftermarket strategy, and I think you made a note that there is 40 more product basket. So is it an open architecture what you are planning to follow, and you would be selling the aftermarket products of many more other manufacturers, or how this aftermarket strategy would play out in next 2 to 3 years, and what kind of investments you need to do here?
So the aftermarket, as you know, is a very big opportunity, and post-GST it's even become bigger for organized players like Lumax because it wipes out the unorganized segment to a great extent. Today, aftermarket is the number 2 customer at about 16% to 17% of the consolidated revenue. Now, going forward, we do anticipate that there would be a growth of at least 25 to 30% on an annual basis. And these 40 products are not just lighting, but they also span across other product lines like mirrors and filters. So there are no, so to speak, we are not, the demand in aftermarket is not governed by a production volume like in the OEM business. So however much we can sell, we should be able to sell. In terms of the investment, just by thumb rule, the investment to sales ratio in aftermarket is much higher compared to that of OE. So in the OE, for us, it's an average about 1:2.5. In the aftermarket, it would be almost double. So it would be 1:5. So whatever we are investing in the aftermarket will fetch a much better revenue. And also, since the overhead and the investment is lesser, the margins also are much better in the aftermarket segment.
Sure. Another question I have is in last few years, you've gone into various joint ventures and new product lines also. So I'm struggling to find out the total market size and opportunity for these products. So if you could throw some light on how big the telematics would be and if there is any change in the insurance rule that can drive this. And I understand that your your partner, Israeli partner, is one of the largest market share owns one of the largest market share in the telematics in Brazil. So how much will be that from the oxygen sensor point of view? So if you can throw some broad numbers in how big the opportunities in these markets is, because I can't visualize how things would change in BS4, BS6, and how our size could go. And then we will gain some market share, we'll use that's a separate issue. But how big is an opportunity?
So on the 2 recently announced JVs, the Lumax Phi and the Lumax Ituran, on Lumax Phi, as you know, from April 20, it is mandated to have an oxygen sensor on every 2-wheeler. We expect the market to be close to 600 crores overnight, considering the price and considering the number of bikes. And this market size would, by 2023, when the OBD Diagnostics 2 comes into play, would just double, because then it would be mandated to have 2 oxygen sensors. So 600 crore market with 0 growth would overnight become 1,200 crores. We expect that we would be able to take a pie of at least 10% of this market in the first phase itself. And we are in dialogue with certain key customers, and we are fairly certain that we would be able to get this slice of the pie to begin with, and obviously the efforts would be to then further grow it to perhaps 15% or even maybe at 20% in the coming years. So that would be the kind of potential for this JV. And again, as the investments are low, we would be looking at a better asset turnover ratio. Coming to Ituran, Well, the telematics size by 2021 is estimated to be close to approximately $300 million US, or roughly, let's say, 2,000 crores. And with our strong partner, as you mentioned, the Ituran as a partner is very, very strong in telematics. We do expect to again start off with at least 10% of this pie to at least take that by 2021.
Any other number you would like to show for any other joint venture which you have held now, and how big the size would be?
So this is Deepak here. I think fundamentally our view is that any new joint ventures we're actually coming under, we would like that in about 2 to 3 years, we should at least have a minimum about 100 crore revenue, right? And there could be obviously different market opportunities and different market penetrations for our joint ventures we look at, depending on the product mix and product commodity. So very recently, as you have mentioned, that Sipal joint venture, we've actually ceded control to Sipal as a partner, and we have decided that we will not be further investing in it. Reason being that when we had entered about 2 years back, we were looking at that kind of an opportunity, but due to certain constraints on the government of India with Finmechanica, which also was the partner to Sipal and the customer to Sipal, we don't see that happening. And hence we've decided that we've but we've actually stopped investing. We basically kind of cede control and focus our management bandwidth in actually formulating new joint ventures, which can actually address 2 to 3 years, 100 crores revenue minimum. So, the recent, as Anmol has explained, that PI, as well as basically the joint venture of Ituran, we are definitely expecting this kind of a revenue size based on the logic what Anmol has actually given.
Just to add to that, what Deepak said, Manish, currently if you look at it, any new joint venture which we're getting into, as Deepak said, we would definitely look at the threshold to attain 100 crore revenue at least in 2 to 3 years of production. So the PI and Ituran JVs would give us that growth. Also, from the current set of JVs which the technologies is having, only the Lumax Cornaglia and Lumax Gilostum are under that threshold of 100 crores. However, we are very confident, based on certain order books, based on certain engagement and dialogue with certain customers, that both of them should also surpass that threshold by 2020. So these, again, would add to the growth. And the company is obviously always looking out for new opportunities, for new technologies, new product lines. But again, that rule of trying to achieve that threshold in the first 2 to 3 years would remain.
My last question is, I noticed that you made one comment that you are looking for export market for the gears. So is that true, and are you exploring some export market for the automatic gears, and is that possible within our scheme of things?
Absolutely possible. Lumax Mano enjoys a very strong in-house R&D capability. Pretty much all our products are designed, tested, developed in-house with minimal support of the partner. And since there are no real restrictions with our JV partner, we are now actually already attained, as you know, a leadership position in India with almost a 70% plus market share. So the next step for us is to start looking at the global landscape, and we will be looking to enter certain key geographies where we feel we can penetrate the market with our technology, both for manual as well as automatic gear shift levers.
Thank you. Thank you, Anmol.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 at this time. Next question is from Abhishek Jain from HDFC Securities. Please go ahead.
Congrats for a strong set of numbers, and thanks for taking my question. Sir, as per the presentation, there is a significant growth in the sheet metal business. Is it for introduction of the swing arm business from the Bajaj Auto or any other reason?
No, so swing arm is one, but also the chassis volumes have taken off better. So okay. I would say that there is a mixed effect for the fabrication. Also, the seat frame business, which comes under the fabrication, is done better. So if you see, we've actually, on the Q3 And on a 9-month consolidated basis, you will not see that growth, but on a quarter-to-quarter basis, you start to see almost close to 8 to 10% growth, which is coming in.
Okay, so what kind of the guidelines do you have for the sheet metal business? What kind of the growth you are looking?
Well, next year we will definitely do a double-digit growth for the sheet metal because, as I said, the swing arm annualized revenues would come in. We're also in talks with some other product line, adjacent product line to get into. I would not be able to divulge the details of it yet. And also we are in talks with trying to expand our share on the chassis business. So cumulatively, I would expect that definitely a handsome double-digit growth should come in for the fabrication or the sheet metal part of the business in the next few quarters.
And what is the margin in the sheet metal business and what kind of the improvement Y-on-Y basis?
The margins would be similar to what the margins are being reported at the company level. But again, with better offtake of Bajaj Auto and better capacity utilizations, because you all know that Bajaj Auto also has had a muted growth in the first 9 months. But we expect that with some of the newer models which they have recently launched, a better offtake, which would give us a better capacity utilization and also be able to give us some push on our margins as well.
Sir, my next question is related to the seat frame business. As revenue from the seat frame business is not included in the top line. So can you please share the numbers for quarter 3 and 9 months?
Sure. So the revenue for 9 months on the seat frame and mechanism business stands at 60 crores, 60.
Okay.
Which is up by approximately 12% compared to the same period last year.
Okay, and in Q3?
And in Q3, this number was 12 crores. And the reason for a dip was there was a end of life of the Ford EcoSport model. So again, the model has been discontinued, the old model, and that's why the numbers have been tapering down in terms of the seat frame and mechanism business.
So this number is for the 50% JV, 60 crore?
It is a total LCAT business. 50% of PAT is consolidated in LATL consolidated.
This revenue number is for the 100% of the entity. This is not the 50% share.
Okay. Sir, gross margin has expanded 100 bits sequentially. So what are the regions?
So again, if you see, the gross margin has expanded mainly because of a reduction in the raw material consumption as well. And again, aftermarket, as I mentioned, has had a strong growth in quarter 3, and aftermarket essentially has a better margin percentage compared to the OEM business. So that has been one of the key growth drivers of the margins as well.
Okay. And my last question is related with the CapEx plan for, what is the CapEx plan for FY18 and 19?
So we currently have not frozen our plan for FY18-19. The budgets are still underway. We would be able to only share those details in the next 1 or 2 months. However, we do not anticipate any major capex in the coming year. And in the current year, for example, we would have incurred a capex of roughly around 25 crores till date. So we expect a similar capex to continue next year as well.
Thank you, sir. That's all from my side.
Thank you. Next question is from Mahesh Bendre from Karvi Equities. Please go ahead.
Hi, sir. Thank you for the opportunity. So what is our capacity utilization as of now?
Any specific product line which you're talking about? Because it would differ hugely from one product to the other.
In general, I mean, is it?
In general, I would say it would be close to about 80%. In some cases, it would be as high as 90 plus, and in some cases, maybe as low as 65%. But on an average, I would say it would be about 80%.
Sure. And sir, the commodity prices are moving up. They have moved up very sharply. All the OEMs have started taking price hikes for the final product. So in this case of scenario, do you anticipate any risk to our margins?
Not really, because we have some back-to-back understanding on account of the commodities and the raw material price movements with most of our OEMs. And again, there could be a delay in the settlement by a few months. However, in principle, all the OEMs would be compensating in terms of the escalations, and whenever there is a reduction, we do pass on that reduction as well. So the margins would be largely protected on account of commodity price change.
That's helpful. Thank you, sir.
Thank you.
Thank you. Next question is from Apurva Mehta from KSA Shares and Securities. Please go ahead.
Hi, sir. Congrats on very good set of numbers. Sir, just a question. Why the share of profit and loss from JV was negative to the tune of around 95 lakhs? This is primarily because of this Ford EcoSport or that?
No, so you're talking about the 95 lakh rupees. So there has been a global, so this was a global platform, Ford EcoSport. And there has been some understanding between our JV partner with our customer Lear to take a certain price reduction or to give a price discount on the entire life of the project on a global standpoint. So since it was a contract or since it was a commitment made by our foreign partner, the impact of the JV standalone stands at almost 2.4 crores. However, Lear is a very big customer for us, and we have some very strong order book with them going forward. So if you see the macro picture, I think it would not make such a big difference.
Okay. So going forward, this JV will turn profitable from Q4 onwards, or what? Because Jeep order was also there.
Correct. So the Jeep order still remains with us, and we are actually speaking with multiple customers, and the order book again for the seat frame business is looking strong. So yes, we do expect that in the coming quarters we should be reporting a profitable number better than today.
Okay. And sir, on the LED side, sir, when do we expect the change to happen for Bajaj? If it will be from 1920 or it will be from 2021?
No, the LED change with Bajaj is already underway. As I mentioned already, that we have already developed 2 lamps in the last quarter, both for the Avenger and the Discover. Both have a content of LED in it. And we have been producing and supplying LED lamps to Bajaj Auto in our Pantnagar facility for almost close to 2 to 3 years now on the Discover as well as the V models. So again, it is not that Bajaj Auto does not have LED presence in their lamps. It's just that whenever a new model is being developed, we do engage with them, and if Bajaj Auto was to go down the LED route, we obviously will get that business because of our strong relations with Bajaj Auto and supplying of lighting to Aurangabad as well as Pantnagar units.
Okay, thanks. Thanks a lot.
Thank you.
Thank you. Before we take the next question, we would like to remind our participants that you may enter *1 to ask a question. Next question is from Dipen Shah, an individual investor. Please go ahead.
Yeah, good afternoon and congrats for a good set of numbers. Most of the questions have been answered. I just had one clarification. You mentioned that in the next year we are looking at a double-digit margin, probably continuing. Now, there will be a positive impact on the margins also because of this Bajaj Auto accounting change, where obviously revenues will go down and hence margins could probably improve. So, if you can just maybe give some sort of visibility in terms of margins excluding this accounting change, whether we will be having double digits even excluding this accounting change or it is including this accounting change.
So post the accounting change, so this impact would be, as I mentioned, only to the tune of about 70 to 80 crores. So if you look at a consolidated entity of over 1,000 crores, the impact becomes not as significant. It's only about 8%, 7%. But the margins which I'm talking about, and we would like to continue and sustain the current margins and further improve on it, would be post these accounting changes.
Okay. Okay. Yeah, I think thank you. Thank you very much.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Anmol Jain for closing comments. Over to you, sir.
Well, I would like to thank you all for joining into the call. I hope that we were able to answer all your questions. For any further queries, you may please get in touch with us or SGA. We will be happy to address all your queries. Thank you very much once again.
Thank you very much, members.